What's going on, everybody? Welcome back to the Golly Potential Trades YouTube channel. In this video, I'm going to be going over two trades that I took earlier today. Two losses, unfortunately, that knocked my funded challenge down by 2%. Let me just pull that up real quick. So, yep, that's the current balance due. I fucking got close to that end of day drawdown. Got to be cautious of that. But yeah, I was up 3.6%. Now I'm down 1.18. Unfortunately, just take a look at this. Profit target's only 6%, 3K, 1.8K. But yeah, there took two positions on NASDAQ. It says 4, but I put in the risk amount, 2,500, just to separate it so I can get the orders filled. So each of these orders just comes out to 1%, and this is 1%. So yeah, this is that. Essentially, what I'm about to do is just go over this trade, go over my reasoning for taking it, what I expected to happen, how I dealt with this. Ultimately, this is just my trading journal that I'm using to review the day. So let me get rid of this. Where's it at? There we go. This one. All right. So now I actually don't trade on TradingView, or I don't really use the TradingView data. I actually use Sierra chart, but TradingView is good because on Sierra chart, I actually don't look at S&P 500 or NAS 100. I actually look at QQQ and SPY because the data that I get on Sierra chart is a lot better, in my opinion, because it gives me what the real participants are doing. And also on TradingView, if you want to use volume, understand that, or I've come to learn that they just use tick data, which is the price moving within the bar. It's not actual contracts. So the volume analysis is not that reliable. Okay, so we can actually get rid of this and switch over to this. So let me minimize. So this is what I've seen. So I'm sitting here and I'm watching QQQ. So I see prices moving lower, and to just bring back this up real quick. So NAS or QQQ, I mean, it's the same shit, honestly. See, NAS was trending lower after hitting all-time highs. Okay, so NAS hit all-time highs, and this is essentially just a pullback. And so now this is just my method that I worked through, and the one that I understand the most. I really don't do top-down analysis. I used to be big in top-down analysis. I mean, it's so subjective, and it kind of just confused me. And so what I do now is I trade off the 1 minute, and I look for a scalper, if you want to call it that. So I mean, this is just my process. This is what works for me. This is how I understand the market best. But I did have the understanding that prices at all-time highs, and now we're getting a retracement lower. So I came to the markets. I have no bias. We can go longer. We can go lower. So I'm watching price. It's doing its thing throughout the market open here. Price goes up, pushes down. I'm like, okay, cool. So this is just my process. Big leg to the downside. Price taking out these swing points, and then price gets right here. This price gets here. I see my signature pattern that I look for. I see this bearish candle that absorbed the selling pressure. So since I seen this, I'm like, okay, I would like to see this zone, see what happens at the zone. So price pushes down, manipulates to the zone, or liquidity sweeps it. So all these sellers that were here who got absorbed, they just got pretty much liquidated, taken out. And then price displaces up. So when price displaced, what I did was I put in a volume profile, and the yellow line shows me the fair value gaps, or the imbalances, the true imbalances. Now looking at it, as you can see, there's several different lines, but this is really the only true imbalance that I spotted right in here, because it's also a fair value gap. Okay, so as you can see, so I was like, okay, I would like for price to return back to that. And so price moves up, and also this is where I see liquidity being. So I'm like, okay, price was likely to take out this high because we have aggressive buying in the upper wick. So they tried to push price up, price went lower. So we got buyers stuck there, potentially. And so that's going to be my targeted high. So for take profit. So I'm sitting here and I'm waiting for price to return. Price finally returns. Let me see if you can see. Okay. Price finally returns to this fair value gap. And what I saw was, let's see. All right. What I saw was buyers stepping in and these sellers down here being absorbed. So me, normally when I see this at just a rejection, normally when I see this at a zone, I'm like, okay, the next candle will likely be bullish. And so first entry right here on the close of that. Actually, it was probably a little lower. I closed when it was still forming. So I entered here for longs, okay? And clearly, that did not work out. So what I did was I went back to the drawing board. Okay, this zone did not hold. Price displaced through, volume spike. And so then price turned back around in the same spot, pretty much with this bullish candle. I entered once more, stop loss below this zone, and then stopped out again. Now at this point, I'm just like, you know what? I just took 2 L's back to back. That's 2% down on my accounts. I'm out. And what I realized was, what I fucked up at was, I married this trade. No, it matched all of my criteria. That entry was a risky entry, and I accepted the risk and I took a loss. Now this, what I should have waited for was for this candle to show actual strength and a displacement through. And so from here, I was pretty much, you know what, I'm done with this. I lost too many. If I was to take a next one and catch it, my stop loss, or not my stop loss, but my risk reward would be less. And if I was to lose, I'd be really pissed. So, so here I exited out. But this is me doing my trade review, looking at it now. I can see that if I would have waited for confirmation at this zone, what I would have noticed later was clean displacement through. Okay. If I drag the volume profile across, see if there's a low volume node in there. Is there? Yes, right there. That's true imbalance. It takes a lot of money for price to, or for participants to reprice. All right. So big imbalance means there was only one way order flow right there. Only buyers were able to get in. So I should have waited, essentially got in on this fair value gap and then took it higher. Or could have simply entered after this candle, because that shows strength. What ended up happening was price then ran to my intended direction. So as you can see, I have this marked. This is like the risk reward ratio. So if I would have entered there, which I actually entered about here, and then price ran, let me see if I can get this. Okay, price ran to exactly where I had it projected. So to the tick. Okay, price ran to it. So of course, so when I took those two losses, what I did was I turned off the computer and I said, you know what, I'm about to eat breakfast. And so I did, got done eating breakfast, and I came back and I seen what just occurred. And initial reaction, frustration, of course. You're like, oh, wow. And so the reframe that I took on was essentially one of a sniper. So when I approach the markets, the way that helps me like really take on a different perspective and really shift the way I'm looking at it is this way. I like to look at it in different analogies, or using different analogies. So what's analogous for this to me is a sniper. You ever seen a military movie or a war movie, something like that? You see the sniper, they have certain targets that they're tracking, right? They're tracking these targets, they're learning their daily routine, their routes they take, their typical behavior, what they normally dress, like all of their behaviors. And that's no different from me having my setup, my entry criteria. I know typically how it should behave. I know how the reaction I want to see once price interacts with the zone, what I want to see when it does this, how volume will behave, how does volume behave on the retracement, everything. And so imagine if the sniper's been tracking this. Okay, we got this intel package, this is their guy. Okay, and so they get the information that, okay, normally this person steps out, drives to here, get out of the vehicle, and then that would be your opportunity, or whatever the situation is. And so, trading perspective, okay, I know what I want to see, I know what kind of pattern I'm looking for, I want to see these things, and on a return, that's when I'll be able to execute. And so, how I shifted my perspective is, it's no different from the sniper who has possibly identified his target, and he's trailing him. He got all the indications that he needs, all the indicators. And so he goes to take his shot. And as he takes his shot, as he pulls that trigger, a gust of wind, a big gust of wind, whoosh, pushes him as he pulls the trigger. And what happens? Shot misses. This is how I looked at this trade. The first trade, everything lines up. Okay, price should behave this way. And then boom, the wind blows, or boom, price continues lower, stops out, takes more liquidity. So I look at it that way because just like in the sniper analogy, you can't really predict these things happening. They normally go with a certain route and you follow that route. Or let's say in this route, let's say this time somebody unexpected is with them, or just something, right? It's life. And so you got these things that come up. It's just like the markets. It's a live entity. Real participants are moving these markets. And so that's what happened. I lined up my shot, I executed, and as I executed, price had other plans. These participants had other plans. I know we need to go lower. Okay, boom. And so then my re-entry is analogous to that sniper. He took his first shot, and now everything's scattered. But then he thinks, okay, I have a shot now though. This is not a part of my plan initially because of that first loss, you can say, that it took. And so you take another one. And then this shot misses. And from there, you're like, all right, I'm fucking out, right? You retreat. Just like that trade I lost. Okay, took the second L. You know what? Typically, I'll say 3 losses and I'm done. But today I'm like, no. Because I think, so I have 3 trading challenges right now. And as you can see, I got close to the end of day drawdown. So if I would have taken another trade, now granted it would have won, but if I would have lost, that account would have been breached. So it would not have been worth it. So I'm like, yeah, if I win, that's cool, recover those losses. But if I lose, it's kind of like detrimental. It's like, yeah, the sniper's like, yeah, if I engage again, I risk being spotted and then I might get taken out, you know. Other than, you know what, retreat, recover, we'll review it later. And that's essentially how I look at this trade. And so when I see it initially take off, also too, the previous video I made about FOMO wasn't there because, like I said, working through the process, what was there was just frustration that, damn. Well, I guess you can say it's like FOMO. I'm like, damn, that I knew they was going in that direction. You know what? I should have been a part of that move. However, what quickly shifted for me was not only that analogy, but also the fact that, but I was correct about what I suspected price would do. So my analysis, my read is solid. It's just the probabilistic nature of the markets, you know. And also it helps me to refine it because when when price does this again later, when price moves through my zone and manipulates all this, then I'll know how to get in if it re-enters my zone. Okay, I need a displacement. I need a fair value gap to be created. I need actual volume behind it. And then I can enter with conviction. Otherwise, I wouldn't have had this data. And so that's how I'm looking at this. But yeah, it's been it's been a down week. Could only trade yesterday and today. Yesterday, what happened? Yesterday so FOMC news hit yesterday, and I see my setup happening. Let me see if I can pull it up. I see my setup happen. I went for a quick scalp and got out. So I mean, it was very short-lived because I wasn't sure how price would react. I believe this is it right here. Or was it? I want to say I entered somewhere around here and I got all like here or something. This is a quick scalp. It met all my criteria. It's just with all that liquidity that got pumped in the markets from FOMC that I wasn't too sure about it. But overall though, this week has been an L week. Just been a lot of lessons. So let me move this around. So yeah, it's essentially, that's what happened today. Like I said, lessons learned. Know what to do for next time, know to wait for a confirmation. Or if I am going to take a risky entry, that, hey, it's a risk. But understanding that my target was where I wanted to. Also, I didn't want to keep looking for the trade because, as you can see on TradingView, it shows me that, we were going into the lunch hour. And typically lunch hour is lower volume, but as you can see, they just ran price up to my target during lunch hour. So that would have been a W, but it is what it is. Lessons, it's a part of it. But yeah, like I said, this is just me documenting the journey, honestly. Hopefully I can look back on this and learn from it and also spot the growth whenever I do look back on it. But yeah, that's been this trading week so far. The plan is to, if my setup occurs, get in there tomorrow. But we'll see. Anyway, it's been another video. It's my week, my recap. Hope you enjoyed it. Like I said, it's just my journal. But until next time, I'm out. Peace.